23rd. Kevin Bakes Baker, David Maris here with you for, I don't know, for the next 4 hours to talk about the market. Well, we'll try to be a lot shorter than that. Let's see, Kevin. So you wanted to talk about how the war is apparently over, or at least according to some stocks and some ETFs, and at least it looks that way. What's going on with NATO, which is a big defense ETF?
Yeah, you know, and I trust the market more than I trust headlines, and certainly headline writers. But this is the themes transatlantic defense ETF, NATO, NATO, and it broke below the 200-day yesterday, and it's following through today. So this is the area over here, and this is Raytheon, Boeing, GE. The big primes, if you will, defense contractors. And as you might have expected, it broke out at the beginning of the year when it started to somehow sniff out the war was going to give them a lot of revenues, and now it has completely reversed that and then some. So at least according to the market, the main conflict is over. You're seeing that in oil prices. More on that later. And yes, could reverse, but it looks to me, especially with the down volume, that people are saying I need to commit capital elsewhere, and the new administration defense buildup trade is over, at least for now. And I'll let you know if I do see a reversal, but this looks pretty definitive of a breakdown to me, and you see that in the individual components. So, as far right now, the war is over in terms of the market, and let's go find some other things to buy.
And do you see it in other components? I mean, other than the defense ones?
Okay, let me go to
I don't
my.
mean components
And
of the
there,
ETF. I mean just other market parts of the
well,
other
no, here
parts.
we go. I mean, this is the XLE, which I was going to talk about, and this isn't as bad, but this is Exxon and Chevron and ConocoPhillips, and it's pulled back as oil has, and again, the down volume is being more pronounced than the up volume, and I talked about this on Tuesday, and I talked about it right when the war broke out, that the the energy, the oil and gas trade is too obvious, too extended, and too late for you to participate in. And that has certainly worked for the E&P, exploration and production players. And for the service players, you put those two together, it's been a push, and you've made no money. And so now, and this is a decent segue, what I bought back in January 15th and 28th at an average price of 94. Here it is at 123, up 35%, 36%. I didn't look this morning. But this is the State Street Spider S&P Oil and Gas Equipment and Services ETF. And so between Venezuela and Iraq, sorry, Iran, you are going to have a lot of rebuilding of oil and gas wells and pipelines and what have you. And so the seismic companies, the frackers, the drillers, they all look very, very good. And the people that pay them, the Conocos and the Exxons, do not. I also have to believe that President Trump has called the components of the XLE and said, put your capital discipline away at least a little bit, and drill, baby, drill, and produce, baby, produce, so that we can have gas prices down for November. And so the oil equipment services names look good. The oil producers do not, and the defense makers do not. So it just suggests that the bulk of the Iran conflict is over, and start getting bullish on other things, in my opinion.
Yeah, it's interesting. It's one of the interesting CNQ that Bob Morris talks about. To has like a 4% yield at the current price, even with a 10% pulled back. What's interesting to me about that one is that he's explained that historically they give special dividends and they raise the dividend pretty aggressively when there are spikes in oil. So you're facing a stock that most likely is going to pull back if peace continues to break out, as they say. Um, and but you have a dividend yield that really supports a price, as he says, anything like $60 a barrel is still great for them, let alone 100. So it's an interesting one. Do you buy these stocks for yield but accept the pullback? Do you wait? It's hard. I wish this whole investing thing were a lot easier, but I don't know if you can on the fly look up at CNQ and tell
No,
me what
I'm
you
looking at
think.
it right now. I hope you see it on the screen.
Yeah.
And Bob, number one, never mentioned armed conflict as a catalyst for his names, and he bought this all along in here in the high 20s, low 30s, and then when it broke out, and I'm pretty sure he hasn't sold a share, so he's got a 50% move or more on his great idea CNQ. And yes, it pays him 4% along the way. I think it was paying him 5 or 6 when he started buying it, and he's been great. But he didn't say I need a war to make money in this name, and that's just been icing on the cake. And so, God bless Bob and the members that follow him because it's worked.
Yeah, I've held on to it as well. It's been a good one, war or not. So, all right. So, did you have anything else for us, or do you want to turn to some of these healthcare names?
Yeah, I want to talk to the healthcare names, and no one wants to hear my voice any longer. So I'm going to be James Earl Jones by tomorrow. So wish me luck.
So first, I want to talk about HIMS. HIMS is the symbol. I've been long and short this through the last couple of years. It's been one heck of a ride, and I was on the HIMS House podcast this last week. And if you're interested in HIMS, just take a look at HIMS House. They have a lot of great information on HIMS. They track a lot of data, and their podcast guests are amazing, if I say so myself. But they did have Mark Cuban. I figure if Mark Cuban can be on, then sure enough I can. Um, but I brought up something there that I guess turned out to be somewhat controversial with some of the bears. I said that they have an opportunity. I don't like that they're doing some drugs that are not approved by the FDA for the indication that they're being used. They're being used sort of off label, I guess is the right word, but I don't want to get into trouble with him. So if I'm misstating that, I apologize because I don't know the right terminology, but this drug that they're doing for testosterone, I'm not thrilled that they're doing that. That said, they're working on going into the sleep market, and I said, "Oh, this could be $1 billion opportunity." And a couple of bears came out immediately. That's ridiculous. This is whatever. And then one of them who had worked previously at Roe, which is an online telehealth pharmacy type company, said, "We looked at that and it was a bad opportunity." And frankly, so I don't want to, but you have to be careful when you're getting advice from people, uh, and advice when you're listening to people online to make your own decisions, because he was worked at Roe 7 years ago, in between working for a hemp company and a gummies company. So while I don't want to say like that's bad experience, I would just say coming a couple years out of college and working as an analyst looking at something for a little while at Roe when they're in their infancy, I'm not sure if that tells you that it's a bad opportunity. I haven't heard a great argument of why it's a bad opportunity. The only arguments that I've heard so far is um, that you have to do an at-home sleep study, which isn't true anymore. That is something that's changed in the last 7 years. You can do not an at-home. You have to do an in-lab sleep study. You can now do them at home and get a prescription for a CPAP. So things have changed there. I'm not going to make the argument. I'm not going to make the argument that Hims ahead of this quarter is a great buy. Most of the data that's trackable looks negative, doesn't look great. And as I've said before, they're trying to do very difficult things that are going to cost a lot of money to build out. I like it long term. I think that what they're doing to democratize healthcare and to make take away a lot of friction to some areas of healthcare, great. I don't think that I think it's between now and getting to a comprehensive ability to treat patients with a variety of issues. That's there's a long way to go for that. So um, I own a little bit, but I did want to just address that because that's been out there a little bit. But on that same podcast, I mentioned something that I just posted to our subscriber chat that I'm long Teledoc
Hey,
TDOC.
David, before you move on, I just called it up. Him's 34% is short. So you don't need a lot of flame to light the tinder. What are the catalysts you see coming up that cause the shorts some pain?
Yeah, so going again, I mean, obviously they've had short squeezes before, and the stock was $70 just this past year, last 12 months, I think. Um, they announced that they were. I think that was during the GLP-1 craze, where this was the biggest thing, and so many things have changed there. Pricing is falling dramatically, so things that look to the upside that can squeeze can also be pile on when the shorts are right. So that's why I mentioned about the quarter. Um, but if the quarter turns out to be pretty good, that would be surprising for the shorts. I think that if they start to execute on some of these things and they show material progress on them, like to say we're doing uh, testosterone replacement or we're doing at home testing labs, including for testosterone replacement or hormone therapy for women, to say that is one thing. And that can squeeze shorts at a short period of time, which they've already done. They've already said that. I don't mean that they've said it to squeeze shorts, but they've said it, and that news is out there. But right now, most of the market, I think, believes that okay, you've said these things. Let's see it. It's like long-term guidance. Like you can say those things, but I want to see you
Right.
execute it. And you can announce long-term guidance and squeeze some people, but a week later, the people who don't like you are going to continue to short you. So 34% is one of the highest I've ever seen in the market. So I don't think it can go up. And so those people can only cover. But I wouldn't say, like, they're necessarily wrong. Everyone plays it for a different game. I mentioned to you, I'm thinking multiple years out. This quarter doesn't look so good. So I'm hoping that's baked out there because I'm not the first person to say it. Him's House people have been saying it. Lots of people have said all the data, credit card data, web searches, app downloads, all of those things haven't looked very good. So I'm hoping that that's out there and the expectations are set that this isn't the quarter where they do $3 of earnings. I think even just exceeding or meeting earnings at this point would probably be pretty good for them.
This recent spike, is that your podcast appearance?
No, I don't think so. I think it was because
All right.
RFK came out and said, "Look, we're probably going to try to reclassify peptides, certain like 15 or 12 peptides, so that."
Okay.
Um, and now that's great for them because they bought a peptide manufacturing facility, and they've been moving ahead of the puck, as the saying goes. They've been moving ahead of where things are moving for a little bit, and that was a good strategic move if this does happen. Now that's a meeting that happens in June, and so we'll find out in June. And if I were short, that's a part of the short squeeze that could happen. Is like ahead of June, I wouldn't want to be long short the stock because if they do reclassify it, it is definitely good for HIMS. Now, is that a good business to be in? So you have the lots of people are using these peptides off label and they're getting them from labs. They don't know what they're getting. If it's if all of a sudden they're reclassified, you can under a doctor's supervision get these even though they're not FDA approved. So on the one hand, regulatory wise, it's a good idea because you get physician supervision for something that hasn't really been supervised before. For the bad, my view of why it's not great is that if things aren't FDA approved, I wouldn't trust them. So that's a personal decision. Does it turn it into a really good business? It probably turns it into a very big business. I don't know if it's a very good business. Um, so, but that's Hims in a nutshell.
Thanks.
Yeah, I did want to talk about this teledoc because on that same podcast, I mentioned one of the things that HIMS could do is they could partner with teledoc. Mental health is healthcare. I think we've all, yeah, post-pandemic have come to know that if we don't already, and they don't really offer anything for mental health care. Do they need to buy Teladoc to do that? No, they could just partner with them. They have a giant installer, user base that could be cross-sold Hims products, and Hims has a giant base that presumably might need access to mental health care. So, is that something that if I were in business development, I would explore? Probably. Is it very different from selling erectile dysfunction pills or GLP-1s? Absolutely. It's a whole different business. So something to think about. But let me talk to you a little bit about why I'm long Teladoc in this scary. It's a scary stock, really. Let me just find my Teladoc um, thing. Well, I don't have it in front of me, so I'll do it from memory. So Teladoc is they have two businesses: an institutional business where they advise and do. If you're in an emergency room in a rural area that doesn't have experts, they can have their doctors come in, look at things remotely, and help navigate a complex case. Um, then they also have Better Help, which is what most people are aware of when they think of Teladoc, which is teletherapy. Okay, well, the institutional business, the first part that is doing really well, and that's a big business and it does really well. The BetterHelp business is not doing very well. It's not doing well for a few reasons, but post pandemic things are declining. Some it's been very expensive to acquire patients. It's a very marketing intensive business, so they spend a lot to get a patient, and so it's declining. So you have a growth business combined with a declining business. The market generally, and I've seen this with a lot of businesses, generally look at those as one thing, and they look at it as a declining business, and they say it's trouble. And on top of all of that, they have $1 billion worth of debt that's due next, I think, June. Okay, well, it's a convert that went wrong. So let's assume it's going to be converted for cash because it was done at, I don't know, $50 and the stock is 5. I'm getting the numbers probably wrong, but it's about right. So, but they don't have $1 billion. So the equity holders are thinking, okay, well, I should get out of this because we have a declining business that doesn't look great, which we don't know how they're going to solve, and they have more debt than they can pay. They have about $750 million of cash. Um, and they owe $1 billion. That math doesn't make sense. Well, they're doing about $150 million of free cash flow a year, so they should be able to get to the $1 billion by then. Especially they can get lines of credit and the rest for a little bit more. Now, if you think that they're going to go bankrupt, yeah, you don't buy equity. I think that's what you don't do. The debt's currently trading at 96 cents on the dollar, so the bondholders or the debt holders aren't thinking, "Hey, I'm going to get put a whole bunch of stock." Debt holders really can't hold stock, most of them, so they don't want that anyway. So what's happened in previous cases? They just refinance it. They refinance it at a much higher rate than a convert would be, but they refinance at a higher rate and they buy themselves some time, or they sell themselves. They sell that piece of the business. Now, does someone want a declining business? Probably not. Does it make sense for a you know for an Amazon that wants to do more in healthcare, or a Teladoc or someone else to I'm sorry, a Hims to do that? Absolutely. But as I mentioned, there's a lot of hair on it. So if things are going well at your company, do you want to bring on what could be seen as a headache or drama? So maybe put that as a lesser of a chance. I think the refinancing is the big catalyst. But let's see how this quarter is. Quarter comes in horribly, or if they're all of a sudden free cash flow negative, you're going to get another chance to buy it. I still think that they'll be able to refinance. Um, but that is something to be aware of. I think it's a good I think it's at least a triple based on the base business, the institutional business being worth 3 times as much as the current value, and nothing for the BetterHelp business. But I think the BetterHelp business is better than that. So I think it could be a really good, interesting, but very risky trade. I don't know what the chart says to you, but
I think we talked about this the other day that I like the fact that you have these up volume spikes, especially around earnings. So someone is saying, at least I don't want to be short, and maybe I want to be long. I want to see it above the 200 day here at 675 or so, and have this up volume versus down volume dynamic continue on the next earnings call. David, could they just shut down BetterHelp and take a charge and move on?
Yeah, that's another option. It would be a shame. It would be a shame. I think before they do that, they'd go to United Health and say, "Hey, listen, you know, pennies on the dollar, please take this from us. Even if we get X, $100 million." I think that it's worth way more than that. Um, just for the access to the patients. So, I again, I may be wishful thinking on all of this. If the quarter's horrible, you'll be buying it at 250. So, but I
Yeah,
did
yeah,
meet
that's
with them I met with them at the Barclays conference about a month ago, a month and a half ago. The CEO who'd come in about a year and a bit ago seems reasonable. Sometimes you meet these CEOs and they're yahoos that you think, wow, I wouldn't trust with my money. Um, I don't generally trust a lot of CEOs from the reason of like they tend to be optimists. I thought he was pretty reasonable when he was describing the challenges. So I thought he was, you know, I think he's doing everything he can to work on this. So don't want to go as far as to say he's a good guy because I don't know if he's a good person or not. But I walked away very confident of management malfeasance isn't my worry. The worry is can he do something with this business, and I do think that they'll be able to do something. So let's talk about Teva. So what does the Teva
please.
chart look like to you, Kevin? Because they're doing everything right. I've held on to it. I sold a little bit just to take profits, and there's not a lot of. It's only execution at this point, and uh, I don't think there's too many upside surprises other than a launch 6 months or 9 months from now. But what is the chart? To me, it feels like people are just kind of going, okay, we know what it is, not too exciting anymore.
You were up what 20 to 37. So what is that? 60% in the span of 1, 2, 3 months. I mean that's a sprint, and now you rest and you do this consolidation between 28 and 37, and you do it the way I want to see it, which is I want to see the up volume days bigger than the low volume days, suggesting accumulation. And I think that's what you have. You can see these channel lines here between 28 and 37, and as long as it doesn't spend much time below 28, I think you're good. Especially if you have earnings coming up in 6 days, you're going to learn a hell of a lot, and hopefully they say something nice that either keeps you in the channel or breaks you above the 37 level. The launch you mentioned, is that a branded?
Yeah, it's a branded antipsychotic, so kind of a
Okay.
reformulation. So yeah, to me, you're at like 11 times 2026 earnings, less, 10 times 2027. It seems super reasonably priced for a generic. Um, so I mean, I'm sticking around it for now.
Yeah, I like it. I think it's very reasonable when you go up that much that fast to rest and consolidate, and that's what's going on, in my opinion.
Mhm. I do want to mention one last one, AMRX. I didn't tell you this ahead of time, so you'll have to do this one on the fly. Amneal Pharmaceuticals, I've mentioned it a few times ago, maybe a few months ago, that I own this other generic company, and uh, they get approvals left and right. They're very, very good at getting approvals. But I think it's up 60% from when I first mentioned it on a show a year ago. And they announced a deal yesterday, and I don't know what to make of it. The company for several years has been working on biosimilars, not as part of the company. The two founders, two brothers, are billionaires that they were working on it separate from the generic company. Biosimilars are generics of biotech drugs. And their reasoning for that was it's really expensive. We didn't want to put it on the P&L of the generic company because it's really expensive to do all this R&D. And then they licensed a few years ago a couple of the products from this other company called Kashi. They licensed a few of them, and it seemed like a pretty good deal for the Kashi owners, which are the brothers who run and own most of Amneal. They got milestone payments in cash for filing, for approvals, and they also got a fee when they licensed it in. Well, yesterday they announced $1 billion deal or so with cash and equity and milestone payments to buy all of Kashi, which includes a bunch of generic, a bunch of biosimilars. So on the one hand, it's a super related party transaction for a ton of money. On the other hand, if you're a generic company and you want to be in biosimilars, one of the questions I asked at the Barclays conference is to all the generic companies, are you better off having a lot of biosimilars or having just a few of the good ones? And they said, no, you're way better off being vertically integrated and having a basket because the baskets are going to allow you to negotiate better. Well, that's what they're doing. So on the one hand, strategically, it makes a lot of sense. Related party transaction wise and transparency wise of how did they come up with this price for what are they getting, I'm not happy about. But I don't know what the stock's saying. Again, I think it's strategically a smart move. I think it was smarter to do it off balance, off P&L. But I wish I knew what they were buying and for how they got to this price. But what does the stock chart say, Kevin?
It looks eerily similar to Teva. Big move from 10 to 15 and 50%, and then a retracement down to 12 bucks or so, and it stays in that channel. No, I don't like the fact that the down volume, especially on earnings day, picks up. So maybe people raise their eyebrows when they hear the related transaction. I'm sure there's a fairness opinion that some, AI investment banker wrote and said this is absolutely industry standard. We'll see. But do they have an approved drug that turns the acquired company profitable and thus makes this accretive for Amneal?
Yeah, well, when they get these approved, right? They don't currently have at least I don't think they bought
Okay.
any approved drugs. But, they eliminate any further um, milestone payments, one-time payments and royalties that they might have had to pay to the company. Um, they did give some long-term guidance, which was aspirational. Long-term meaning 2030, so it's not that far away.
Yeah, I mean, come on.
But that doesn't I think whoever advised them did an excellent, excellent job. The conference call was fantastic, and the idea to, "Hey, I'm gonna do this transaction, but I'm gonna give you long-term guidance that's quite positive," and, I think that was smart because it kinda kept some people who were worried about the long-term guidance. Um, I'm still own my what I own. I don't know. I think generics, they're always blow up, and so you always have a chance to buy them again. So I'll see where I am in a week or two, but I want to get the disclosures and get a chance to talk to management about it. Strategically smart move. Return on invested capital, I'm not so sure.
Did the conference call happen today or yesterday?
Yesterday,
Yesterday.
yesterday.
Okay.
Yeah, so the deal was announced yesterday,
All right.
and they tell. I don't want to say they telegraphed is the wrong phrase because it makes it sound, but I think they gave people a pretty good impression that they were um, thinking about doing this because it was a natural question that came up of biosimilars are pretty hot right now and you need the market's changing. In addition, you have this relationship with this. It's not that this related party was unknown. They'd already licensed a couple products. And so it came up and they were fairly open of saying like, we'll evaluate it, but this would have to be an independent committee of the board to do it. Clearly it makes sense for us. So, but with that, I think we're done. 10:34. We didn't give you the full 4 hours, but maybe tomorrow, faithful viewers, you know where to find us. You know to go to wallstreetbeats.com. You'll get my whole write-up that I just posted on the teledoc idea. But
Yeah,
there you go. Hey, by the way, if you want something else, you could always check out the healthcarediaries.com too. Have you checked that out, Kevin?
I have not.
Oh, well, that is a new blog post from David Maris. That's free, by the way. I'm not selling anything. It's free. You can check that out. I'd check out Wall Street Beats first, but when you're done subscribing to Wall Street Beats,
You've made money for our members, so I would check out. I will check out Healthcare Diaries.
yeah, no stock ideas there, but Everyone have a great week. We're dark tomorrow, so we'll see you on Monday.
Take care, folks.